Okay, Professor Jim Schultz here from my Finance 512 class. It is Tuesday morning, November 3rd, about 10 o'clock, and as we talked about last night in class, I wanted to go ahead and put on this Tesla earnings trade for you guys. And so I'm going to do an Iron Condor simply because there were some requests to kind of look at how to do an Iron Condor. So I thought we would kill two birds with one stone and go ahead and do the Iron Condor for Tesla earnings. I may do something else later on today for Tesla earnings, I'm not sure. But this way, at least you guys will have a video of how to do an Iron Condor in general, and if you want to go ahead and tail this trade, you can do an Iron Condor for the Tesla earnings later today. If I do something else, though, I will go ahead and email the class later on if I take another position in Tesla later on for the earnings. Like last time when I did Apple and Twitter, I had a couple of things on in Apple. I had a strangle and I also had a calendar spread, and so I probably won't know that until a little bit later on today. But let's go ahead and take a look at Tesla, and let's see what we've got. I haven't even looked at Tesla yet, and so I will kind of be searching for a position, along with you guys. And so, all right. So the first thing I want to point out is something that I have definitely shown you guys in previous videos. The current price of Tesla is 212. What Thinkorswim does going into earnings dates or earnings calls is Thinkorswim will go ahead and calculate the expected move, the overnight expected move for you, based on the implied volatility leading into this earnings call. And that is shown right here with this market maker move of about $17. You can see it says plus or minus 16.97. So that essentially means that based on tonight's earnings call, the market is anticipating a plus or minus $17 move in Tesla. So with the current price at 212, I kind of want to set up our Iron Condor with this in mind. And so if I'm looking at plus or minus $17, that means at 212 I'm looking at what, about 230 on the top end and about 195 on the bottom end. So I think that's where I'm going to establish my short strikes. Well, at least let me take a look at what that looks like. Now, what I'm going to do is I'm going to go ahead and use the weekly options for this earnings call, just because, as I've said before in some of my other videos, when I do an earnings position, that is literally an overnight position. And so I'm not looking to hold this thing, till November expiration or even December expiration. As I've kind of talked to you guys about before, my own time window that I trade in generally is 45 days to expiration. So most of the positions I'm looking to put on right now are going to be in the December options. I'm kind of done with November. I have November positions on because I put them on in the last few weeks. But as those things start to hit my profit targets, or as those things start to come off as winners or losers or whatever, I'm looking to reestablish now in December. I'm not really too interested in November anymore. But for an earnings situation, that is a binary event that's going to move one way or another, essentially overnight, I will typically use the nearest expiration. So for this one, that's going to be the November 1 weeklies. So let's go ahead and pull these guys up. And I don't think I need 60 strikes. Let's do 40 strikes maybe. Yeah, actually, let me go ahead and do 30. Yeah, that's probably good. Let's look at 30 strikes. So, all right. So Tesla's still around 212. So I'm going to start by, I just kind of want to see what happens when I sell the 230 call. So I'm going to sell the 230 call, and I'm going to also sell the 195 put. All right, so as you can see, Thinkorswim has recognized that as a strangle, which is obviously correct. And so if I were comfortable taking unlimited risk here, if I were comfortable having two short options, then I would go ahead and just put this strangle on and be done with it, right? And that might be something I might do later on with, another earnings trade for Tesla. But I wanted to show you guys how you could put on what is called an Iron Condor that essentially limits your risk. And so what I'm going to do is, on the upside, I am going to buy a further out of the money call, and on the downside, I am going to buy a further out of the money put. And what that's essentially going to do is it is going to limit my risk. And so let me go ahead and do that, and I'll explain kind of how it works. So I'm essentially going to buy, let's see, so they've got 2.5 point wide strikes. I'm going to go ahead and I'm going to make it a little bit cleaner. I'm gonna do a 5 point wide Iron Condor. 5 point wide just simply means that the difference between your short option and your long option strike is 5 points. So I'm gonna buy the 235 call. So holding down control, I'm gonna buy that. So right now, Thinkorswim recognizes this as a custom order. But watch, once I buy this 190 put, it's gonna populate as an Iron Condor, because Thinkorswim obviously knows what I'm trying to do. So, boom. So I'm gonna buy that. That 190 put. So I have an Iron Condor, and obviously I don't want to do a 10 lot. I don't think I want to do a 10 lot. Let me do. I'm gonna do a 1 lot. I think. Just because, again, I don't know that. I'm really just doing this for the purposes of the video. I don't know what I want to do for the purposes of trading against you guys. And obviously, like I've been doing, I am rolling incognito because I don't want you guys to know what I'm doing. And so, alright, so, okay, so let's take a look at this. So I'm looking at collecting a $2 credit, which is actually pretty good. So I'm looking at collecting a $2 credit. Alright, now, what is the most you can make out of an Iron Condor? Well, your best case scenario is Tesla stays inside of this expected move. Your best case scenario is Tesla stays between 195 and 230, which would essentially allow all of your options to expire out of the money, and you would keep this entire credit. Now, what is the most you can lose? Well, here's what's interesting, and what you need to recognize is only one of your sides here, either the call side or the put side, is going to get tested. So either Tesla's going to move up to 230, 235, 240, and it's going to test your call side, or Tesla's going to move down to 195, 190, or whatever, and it's going to test your put side. It's literally not possible for both sides to be tested simultaneously. And so your worst case scenario is that this thing blows through, you know, your break even on both sides. Now, what would be your break even on both sides? Well, it's going to be your short strikes plus the credit that you receive. So just because it's floating as the market floats. And so I'm just going to make this really simple. I'm going to lock this in at $2 just so that it's not constantly floating as I'm trying to talk through what's going on. So my break even points are going to be 230 plus $2 or 232 on the upside, 195 minus $2 or 193 on the downside. So only one of those break-evens can possibly be challenged at one time. So if one of them does get challenged, then your worst case scenario is Tesla blows through your break-even and then blows through the long strike on one of your sides, either your long call or your long put. And so the most you can lose is going to be the difference in your strikes. So it'll be 5 points on either side. Right, you have a 5 point wide call spread and a 5 point wide put spread. So the most you can lose is the difference in your strikes minus the credit that you received. And so the most I could possibly lose, if Elon Musk just blows it out of the water tonight and just tells everybody that he just bought Ford and he bought Toyota, and you know the Tesla X and the Tesla Y and the Tesla Z is greater than everybody ever thought imagined, and Tesla jumps to 500 tonight, the most you can possibly lose is $5 minus $2 or $3 per contract, obviously, right? So if you do more than a 1 lot, then you stand to risk. You're risking more, but you also stand to gain potentially more. And so that's the nice thing about Iron Condors, is that they are a defined risk strategy. And so it's honestly one of the things that I would recommend people who are trading options for the first time start with. Start with your basic vertical spreads, and then maybe graduate to Iron Condors when you want to take a more neutral position on the stock. And so that's essentially how an Iron Condor works, and essentially your maximum gain, your maximum loss, and what you're hoping happens. And the great thing about this trade is, again, your expected move is $17, right? So with the stock sitting right at 212, you're basically making the stock beat you tonight, right? You're making the stock beat you. And as we saw with Apple a couple of weeks ago, a lot of times these stocks do not beat you. A lot of the time, these stocks just kind of sit and they just kind of meander. And yeah, they'll move one way or another, but they won't move enough to threaten your short strikes. And so, just a little something that's kind of interesting. And so, I'm not even going to put this trade in just because, again, I'm not sure this is what I want to do later on. Well, let's go ahead and put it in. So, I want to see, what is it selling for? It's selling for 201 right now. So, I'll go in at 201 and see if I can get filled at 201. Tesla's not the most liquid stock in the world, so it's even I'm in my paper money account. Even in a paper money account, it can be hard to get filled. So I'm gonna cancel replace. Let's go down to $1.99. I think that'll probably get me filled. Just for so I want this thing to fill for the purposes of the video. Yeah, I can't even get filled at $1.99. So again, even with fake money, Tesla's not a great stock to trade. It's not bad. There's a decent amount of activity, but it's not like trading Apple or Twitter or Facebook. Oh, there we go. So we got filled at $1.98. So that's not too bad. So again, that's going to alter my break-even points by a couple of pennies, obviously. But that is how you do an Iron Condor. That is a Tesla earnings play. And so I will see you guys next time.